Welcome, welcome. So happy you're here. Welcome to the 10th. Can you believe it? The 10th stream of the Secure the Bag Book Club here on my YouTube channel at What Brooke Spent. And I'm Brooke, and I'm Brooke Brown. I'm so glad you're here. I am thrilled that we have made it this far through 3 books. We're on the 3rd book. The book is titled Taxes 101. And what an incredible ride this has been. First of all, thank you to all the 103 subscribers. I hit 100. Oh my God. I hit 100 subscribers. Thank you so much for joining me on this journey and just agreeing to learn right alongside me. I really appreciate you all. I appreciate everyone that participates, week in and week out in this book club. So yeah, without further ado, let's get started because we've got a lot to cover today. Okay. Another housekeeping rule. If you are watching after the fact, please leave comments in the discussion, leave any kind of discussions that you want in the comments, and we will definitely keep the dialogue going, even if you haven't seen the broadcast live. Okay. So one of the first things that I wanted to talk about is, this is more of a reminder because I've spoken about this in previous videos. You can see it on one of my shorts where I talk about this idea of margin, where this is really all the point of, acquiring assets and decreasing your liabilities and whatnot, is to create margin, is to create space between, how much money is coming in versus how much is going out, right? When you have more expenses than you have coming in, you don't have a lot of margin. But when you are, you've got assets that are generating income, which is what we are learning about doing in the book club, you want to have that space. You want the gap to be big. So that is what we're learning about. So when we talk about taxes, it's lowering that tax bill so that you can use more of the income that you generate to make investments, to be strategic about the things that you need to do as far as like expenses and stuff like that for your household. That is the whole point. So that is why we're talking about taxes. I know you're like, but you said we were acquiring assets. Taxes aren't assets. Well, they are. This is freeing up more money to use to buy assets. So there you go. One thing that she mentioned at the very beginning of this section, and we're talking about chapters 3 and 4. We've already covered chapters 1 and 2 in the previous stream. Go back on the Secure the Bag Book Club playlist and check out that stream. She talks about evading versus avoiding. So we've all heard of tax evasion, right? Where people are like, skipping out on their tax bill. They're just purposely not paying, or like maybe they didn't know that they needed to pay. They had some bad advisement and they just didn't pay. Well, that is illegal. So that's evading, that's tax evasion. Well, then you have tax avoidance, which is a strategy and is perfectly legal. Tax avoidance is where you are using income limiting strategies to make sure that you, whether it's, deductions or credits or, depreciation, advanced depreciation, all that kind of good stuff, which it talks about in the book. And you're essentially lowering your tax liability. So that is perfectly legal. So there you go. I wanted to do a quick check-in also. So for those that are attending live and also those that are watching after the fact, here is the question of the stream. When it comes to taxes, I'm curious, is it the math, the record keeping, and the research involved in taxes that scares you the most? Or is it the kind of what feels like arbitrary, uncertain enforcement of tax law? Curious to know. So go ahead and leave that in the comments, or leave that, just park that in your brain, and let's talk about it in subsequent streams of the book club. Okay. So the two chapters, the two chapters, chapter 3 is called Different Types of Personal Taxes. And it goes into talking about income tax, employment and payroll taxes, capital gains tax, property taxes, sales and use taxes, gift and estate taxes. That's chapter 3. And then chapter 4, it talks about estimated tax payments. So it kind of walks through how you figure out your tax bill independent of, like, other services such as like online providers and stuff like that, right? So interesting enough, I didn't know the difference between income and payroll taxes. I mean, I suppose I kind of had a grasp for it. There's certain taxes that come out of your paycheck, and then there's taxes that are realized during tax season when you're ready to pay the IRS, right? So there's a difference, and it pays into different categories of the federal and state budgets. So I thought that was pretty interesting, and it definitely kind of made me think like, oh, I didn't realize I had a little gap there. So there you go. On page 77, I'm going to turn to it because it talked about by the way, it goes into, I mean, I'm not going to go through every section because obviously you're reading the book. And so I'm not going to like make you feel like I'm oversimplifying it. Plus, I don't want to go, the broadcast is supposed to be shorter, or 20 minutes long. And if I went through every page, we would be here all night. So it talked on page 77, it started talking about capital gains tax. Now, capital gains tax is when you buy an asset and for a certain price, and then you sell it either in the short term, so within a year of buying it, or in the long term after a year. And so when you buy the asset, you have what's called the basis. Okay, BASIS. And that equals the total cost of acquiring an asset and getting it ready for use. Okay, so if you buy an asset and there's commissions, fees involved and stuff like that, that's part of the basis. And then you have the profit that you make, hopefully, right, from selling that particular asset, and that is the capital gain. And then the capital gains gets taxed. So for our purposes, I thought that was important to highlight because hopefully the portfolio of assets that we're trying to build here, right, by learning about the different assets and stuff like that, is hopefully that's going to be useful information to you. So learning about capital gains tax, I think, is a good, kind of aside supplementary kind of education that you need to have for yourself. It mentioned things like tax loss harvesting, which is another part of deciding on how to manage your capital gains tax. And that's on page 79 and then on to page 80. So again, if we're talking about acquiring assets, we are going to need to know what our liability is as it relates to the taxes that we pay on the profits that we make. Then it talked about property taxes and what they go to fund different projects that cities, states, the federal government uses it for, and how those those taxes are levied. And I wanted to make a really important point because I hear this a lot. I hear this particular scenario a lot where an elder, right, a senior citizen or whatever, they own their house outright, but you still have to pay property taxes even though you don't have a mortgage. And, a lot of times property taxes will go up significantly if there's different things that have been upgrades have been made to properties, comparable properties in their community. and maybe it's gentrification, or a new development comes in, and they can no longer afford their property taxes. And then what ends up happening is they lose ownership of their house. They have a tax lien, which the books talks about, on their property. So essentially the government is saying, we have rights to your property because you aren't paying your tax bill. I think it's important that we educate our elders on how to contest if they feel like their property taxes are being unfairly assessed, right? So I think that that's a protection that we need to encourage in our community for sure. Then it talked about sales and use taxes, which I won't get into, but it did talk about in the next chapter, which is chapter 4. I did want to point out that it talked about gift and estate taxes too, which you should definitely look into for sure, because we do talk about inheritances in my content and on the page. So yes, definitely look into that. Now, chapter 4. This is, I think, something that's really important to pay attention to, because like I said, the question of the hour is, is it the math or is it the enforcement that you're afraid of? And if you're afraid of both, then chapter 4 is really where you're going to want to stick your head in, right? And just lean forward. Okay. So here's the part where you need to lean forward in, right? So it talked about estimated tax payments and how you figure them out, right? On page, where is it? Oh, so it talked about on page 98, it talked about how the system is a pay-as-you-go system, right? So if you're a small business or an investor or a landlord, a lot of times you're going to want to be paying those payments quarterly, because you're not getting payroll taxes coming out of a paycheck, because you have your income is different than and maybe less consistent or equal than, say, someone who just has a 9-to-5, right? And equal payments throughout the year. So it mentioned the marginal tax rates, and it talked about how different sources like investment income, interest, withdrawals from retirement accounts, business income, and rental income are the types of income that you end up wanting to do those estimated payments throughout the year on a quarterly basis. That's what the IRS is expecting of you. So what ends up happening when you do an uh-oh, right? When an uh-oh might be a part of your strategy. It very well might be. So for example, on page 105, it talked about early retirement account withdrawals, which it's something like if you're trying to buy property and you're like, I'm going to use some of the money from my 401k early because I'm going to make this investment and I need access to cash. I need access to capital. What am I going to do? Okay, I think I'm going to think about what it would look like to pay the 10% penalty for, having that or making that particular financial decision. That might be something that you do. And in that case, you need to be prepared to say, okay, I took that out during the year. Let me go ahead and pay, what I estimate to be the tax on that. I really highlighted up a storm in this particular chapter because I wanted to know, line for line, what do you do when, for example, you feel like you've overpaid, or you are underpaying and you need to play catch up, or you're getting penalties levied against you. What do you do? And this chapter 4, talked about the math. I'm going to direct you to page 107, which is under the section that reads estimated tax math. If you're afraid of the math, it did a good job simplifying it, and I won't go into the math here because I don't want to overwhelm you. I personally think if someone's talking to me with numbers, meaning they're just rattling off numbers back to back and they're trying to calculate it and they're trying to get me to calculate it at the same time, I'm like, what are you doing? It's a blur, sir. So yeah, I'm not going to go into an explicit example, but I do have a short a YouTube short on my page that talks about the difference between tax deductions and tax credits, which I think you guys are going to love. I think it had a whole, math riddled example that I think everybody can follow along with, and it's super cute, and I think you should go ahead and take a look at that. And if you're a part of the book club and you go to that video after this, leave a comment, hit the like button, let me know what you thought of the example and if it kind of cleared things up for you, because we throw around a lot of the vocabulary, the jargon, and you can feel intimidated to raise your hand and say, oh, what does that even mean? What's the difference between income tax and payroll tax and employment tax? What is this FICA that you're talking about? What's Social Security? How do I get it? When am I eligible for all this money that I've been paying out of my paycheck? So on and so forth. I think that kind of research is also something that you need to be mindful of as well, and certainly interested in. Diane mentioned in the comments that she remembers that video. Thank you for seeing it come across your feed. So excited for that. And she says it made it much clearer. So there you go. That's why I produce this content, is to make sure that we are adding clarity, and no question is a dumb question. So lay it on me. And if you have a follow-up question and something's like, now that you mention it, I don't even know what this means, go ahead and leave it in the comments under this video. I'll address it. Maybe I'll address it in a whole video, so definitely want to engage you that way. And then another thing that I wanted to assign to us is, it's not homework, it's an assignment, but it's not homework, it's optional. But what I wanted to do, because it mentioned doing a checkup, right? Throughout the year, doing a checkup, checking in to see, how much you're paying into the system and whether you're overpaying, right? Or underpaying, but we like to think we're overpaying, right? And what you can do is you can adjust, if you're an employee, you can adjust your W-4 to take less out because you've been overpaying. So you don't want to give the government an interest-free loan on your money. That's what getting a refund back means, is that you've been loaning out your money to the federal government that you could have been using for investments or acquiring more assets. We don't want that. We want to give our fair share, no more, no less. And so what I want you to do as your assignment is set a reminder sometime in the next few weeks, but definitely before we finish this book. We'll finish this book on Christmas Eve. And so, make sure that you set that reminder to go in and bravely, courageously look at what you're doing as far as what you're contributing to your taxes, and is it enough, or is it too much, or is it just right? So that's how we are being proactive about our tax planning, not just preparation. Okay. And then last thing I wanted to talk about is a quick announcement. I have done something wonderful on my website, whatbrooksspent.com. On the page that is www.whatbrooksspent.com/course. I have created a course that includes modules that cover the books and the subjects, the topics that we've covered in the last 2 months of book club. So the first class is lesson 1, how to protect your IP. So that talks about intellectual property, and I have a free PDF there. The whole course is free, and you can go back and refresh yourself on the material. You can use it as a companion guide for when you're going and looking at previous videos. Maybe you just tuned in and you're trying to play catch up with the other subjects. This is your companion guide. And then the second lesson is called How to Buy Art Better. And that goes in with our second month of streams that talked about the book, The Art of Buying Art. And again, it's about acquiring assets and making sure that we are learning the process, learning the jargon, the vocabulary, learning how valuation happens in these particular markets, because it's somewhat brand new to most of us. So yeah, want to be prepared for when you get that windfall, which we're expecting. We're expecting a windfall, yes. And so there is that. Thank you so much for tuning in to this week's stream. I really appreciate you guys tuning in. And thank you so much, Diane, for tuning in and leaving a comment on the live stream. Really appreciate you. And I will see you on the next broadcast. We are covering chapters 5 and 6. And again, you can go on my website on the events page to get the schedule so that you know where we are. And don't forget that you can listen to the audiobook if you have a premium subscription to Spotify. This is not an endorsement or a plug for, I don't get paid by Spotify. It's just, I thought it was very convenient. Diane says, I can't wait for the next one. Thank you so much, Brooke. You are absolutely welcome, Diane. All right, we'll see you guys on the next stream. And remember, tell the others. Bye.